Shareholder activist Theo Botha is in studio with me to explain some of the problems with regard to Steinhoff's Pepkor deal. Now, maybe we need to refresh because going back a few months, Theo, many people were up in arms about the fact that there wasn't a cautionary release. You and I did discuss that, as well as the directors' dealings that took place from there. But that's in the past now. What is key to this transaction now, from what I understand, is clarity on two particular issues. Let's start on the valuation of the consideration between the two companies.
Yeah, in terms of JSE rules and regulations, Brait issued a circular because of the transaction, because Brait was selling their Pepkor shares to Steinhoff, and Steinhoff also issued a circular to their shareholders. And in both circulars, they had to get or call for an independent evaluation. And the independent evaluation was done by two of the top 4 auditing companies in South Africa. And what is interesting is that in the Brait circular, the independent valuation said the shares were worth 53 billion, and in the Steinhoff circular, it said the shares were worth 68 billion. So obviously, yes, your Brait circular and your Brait directors would have briefed the auditors to do the valuation based on their conditions, and the Steinhoff directors would have briefed their independent auditors to do the valuation on whatever their conditions are in terms. But it's so interesting to see that there's a 15 billion difference between the two valuations of Pepkor shares.
For the viewer, whose valuation is higher?
Well, the Steinhoff valuation is higher at 68 billion. But what is interesting is that your Brait shareholders actually got a higher share payment than the valuation of the auditors. So actually they're in the money. So the Brait shareholders have done very well.
You also had some interesting insights on the clarity of the issue, the price of the deal as well. Not only that, but the construction with regard to the voting pools.
Yeah, in terms of the, which is quite interesting, Steinhoff was had no controlling shareholder prior to this transaction. And in the circular, it actually mentioned that they're putting together a voting pool agreement, and in that voting pool agreement you've got voting pool parties. Now what they don't disclose to the shareholders is the voting pool agreement, and they say, well, we haven't finalized it. They do disclose certain of the parties within the voting pool agreement, and the main parties will be Dr. Visa and Steinhoff directors, as well as Brait. So those are the 3 parties. But when you add up those 3 parties, the shareholding that they would hold will be 34%, and that's below the 35%. So I don't actually understand where they get to the 35%. So for me, what I would like to see is I'd like to see the voting pool agreement disclosed to the shareholders. I would like to see who are these parties in the voting pool agreement, and then I'd like to see the shareholding that they hold in the voting pool agreement.
The parties within the voting pool, what difference does that make necessarily to a shareholder who might be observing this deal and thinking Pepkor with Steinhoff makes perfect sense? Why do they need to ask these questions in advance?
Well, I think it's important because you want to know the parties in terms of the voting pool agreement have actually got a major say on Steinhoff. Prior to this, there was no major shareholder. This major shareholder could exercise things which could be for their benefit and not for the benefit of the minority shareholders. So surely when you put a transaction together, you need to be transparent right up front in the transaction as regards who all the parties are. But also going forward in terms of this transaction, if you look at Brait, Brait is also a party to the voting pool agreement. Yet they said nothing in their circular to their shareholders that they are actually part and parcel to the voting pool agreement. Because the impact of the voting pool agreement is that Dr. Visa, who will own 19.5% of the equity of Steinhoff, and that's in the voting pool agreement. What they say in the circular is that the voting will be done by a majority. So Dr. Visa will always be the majority in the voting pool agreement. So here he has a 19.5% shareholding in Steinhoff, but yet he's entitled to vote 35% because he'll be able to vote anybody out in terms of the voting, in terms of who's in the voting pool.
That's a lot of power for one person. Have we ever had a situation like this in South Africa before? Is it precedent setting?
Well, I don't know if it's precedent setting. If you look at Remgro's also got AB shares. If you look at Shoprite, they've also got various different type of shares. If you look at Naspers, you've got different type of shares. So I don't know if it's precedent setting, but it's something which I think needs to be told to the shareholders as regards who are all these parties in the circular.
So as a shareholder who might be sitting at home today watching this program, the 3 key considerations that one should take away from this red flag that you've raised?
Well, I think the key considerations is that shareholders need to actually look at these circulars that are being issued and they need to actually read into it and see actually what are their rights. So if I was a Braid shareholder, I would definitely not be for giving away my 5%, 5.9% in Steinhoff and put it into a voting pool arrangement.
Well, we'll leave it on that note, Theo.
Super.
Thank you so much for your insights today. We'll definitely do a follow-up as to whether or not this deal goes through and some of the key highlights that come out of it.
Thank you
so much to shareholder activist Theo Botha.